Are you a small business owner and tax time just makes you sweat a lot, stress a lot, maybe lose some sleep, or it's just your least favorite time of the year? Well, I'm a small business owner based in Seattle, Washington. I'm an event planner and event producer, and I have 3 tips for you that have helped me create a little bit more zen around tax time, which we all know is just about a week away here in 2024. And I hope you could take these 3 strategies to make next year's tax season a little less stressful. Before we jump into it, I'm Logan Clements. I'm a freelance event producer based in Seattle, Washington, but I execute events here and all over the world. I do want to remind you to like, subscribe, turn on that little notification bell so you get notified every single Monday when I drop new videos. I'm also the co-host of the Better Events podcast with fellow event pro Mary Davidson. And on our podcast, we dive even more into some of these topics about event planning, event production. We also talk about small business finances and running a business, running a profitable business. And we're on all major podcast platforms. So first, I do need to do a disclaimer that I am not a tax accountant. I'm not an accountant at all. I'm not even a bookkeeper. I am a small business owner. And so that is the lens I'm going to be using for this advice. I've learned a lot from other people, other business owners, SCORE mentors. I highly recommend the Small Business Administration's SCORE mentoring program. It's free. It's amazing. But these are 3 things that I honestly wish I did back when I first started my business, or at least, knew about, and I could start strategically implementing them, because I was you, dear watcher, listener, however you're consuming this video. I was you. I was so stressed out come tax time. And I started my business originally when I first lived abroad. And so US taxes were something that I didn't really get stressed out about beforehand because I paid taxes in the country I was working in. And so I had very minimal things that I had to do tax time. But boy, was I wrong when I was a business owner. I got hit up for a tax payment come April that I had not saved for. Granted, it wasn't a ton of money. It must have been maybe a couple $1,000s at the time. And I had my dad was the one actually helping me with my taxes at that time. And he was like, yeah, you just need to make this payment. And I'm sitting there going, I don't have this money just sitting around. I hadn't even thought about it when people were writing me checks for my first year of business. Well, I was stressed, and I felt like for the first couple years in business, every time we got close to tax time, to me, it just felt like such a mysterious system. I didn't understand how they came up with some of the numbers of what I would owe, and it was something I just lost sleep over. So fast forward, I've been in business now for almost 8 years, and I'd say about 3 years ago, I finally got more zen about it all. And the first step was that I read the book Profit First. I will link that down below so you can read that book or listen to it on audiobook. But my first tip for you as business owners comes from that book, and that's to start a tax account. Now, that's not an actual tax account with the government or something like that, but a bank account that is linked to your business that is just for what you're going to pay towards taxes. So in Profit First, a lot of what they do is the envelope method, meaning you get money in one place and then you divvy it up into little envelopes, so you always are saving for these different things. And so one of those envelopes is taxes, and they have different formulas and percentages you can use and things, but I would say a general rule of thumb is about 20%. 20% of whatever money comes into your business needs to go to taxes. And that has been a pretty safe for my business. I'm service-based. I don't have a ton of, I don't have physical items. I don't do sales tax or anything. This is just my federal IRS taxes that I'm doing. 20% of whatever money somebody pays me, 20% goes into that account. That alone is a great step, and I wish I did that when I first started my business, because that first year I would have said, when I was told how much I owed to taxes, I'd be like, of course, here it's probably sitting in this account, if not maybe even more than what I needed was sitting in this account. So setting up a account, for me, it's just a savings account, but you could do a checking account or whatever, but just something separate so you're never tempted to dip into it if your expenses get high or anything, because it's not really your money. It's meant to be for the government. So you need to just separate it and don't even think it's your money anyway. And my second tip for you as a small business owner is to pay quarterly taxes. So again, I'm not an accountant, so I can't fully explain some of the nuances to it, but essentially what quarterly taxes are, from my understanding, it is you paying your estimated taxes for that quarter. So end of quarter 1, which is, January, February, March, if you're going calendar year like I do, you're paying what you estimate you think you would owe for those 3 months. And you go on to the IRS, IRS.gov, and actually make a payment. So my first tip I said was to have that tax account. So this is something I now do quarterly, and the deadlines are a little different. They're kind of at the end of the quarter until, for some reason, I want to say fourth quarter is actually in January. It's a kind of a weird timing, and quarter 3 is in September. Again, they're all over, but you can find them online. But you essentially pay your estimated quarterly taxes. And so that when it comes tax time, you've actually already hypothetically paid all of your taxes you should owe for the year prior. And now it's just reconciling different, because that's why it's called estimated taxes. It's not your real tax, it's your estimated tax. So if you had a very good year, you made more money than you thought you would, now you're probably still going to owe taxes, some money at tax time. If you did worse than maybe you thought you did, or worse than your predictions gave, you actually might be owed a refund. By doing this quarterly tax payment was the first year in years that I actually got a return. I got a tax return. Always it was I owed more money, and this was the first year I got a return. Now, everyone has different philosophical views on should you overpay your taxes and then the government's holding your money and then paying you back, but I was a big fan of I just want to stress less about it, so let me make sure I'm covered, and then I'll get that return back. So quarterly taxes, game changer for you. There are certain sizes of businesses where you actually get penalized if you don't do quarterly taxes. I'm a single member LLC. I'm the only employee of my company. And so for me, I don't really fall in that threshold, but personally, I have found that's been really helpful for reducing my stress at tax time. And my third and final tip is going to be one you hear from a lot of people, is hire a bookkeeper or a tax accountant. Hire somebody to help you with your books, because it can get confusing. What I just explained with the quarterly taxes and the other bank account, that can be overwhelming. Those are both steps you can do on your own. And yet I use my accountant to help me figure out what I owe for estimated taxes. They send me reminders at these weird deadlines, like I told you about, for those quarterly taxes payments. They are my safety net, I would say, for asking questions about tax implications and things I'm not thinking about. And then they actually put my tax return together for me. Now, I bounced between a couple different folks for my first few years in business. I think I waited my second year maybe, or third year, I started hiring a bookkeeper. And now I'm probably in my most robust kind of bookkeeping setup right now. I use the terms interchangeably. I know if you're a bookkeeper versus an accountant, you're going to say it's two different things. But for me, my accountant does look at my books, and I'm the one who categorizes things in QuickBooks that I use, but they have access to it. They reconcile it for me, and they do my taxes. It's amazing. It's such a weight off my shoulders. It is a service that I'm paying for, and I pay them monthly. I know other people who pay them just at tax time. It's really up to you. For me, I've definitely fed into my accountant system where they like that they work with me year round. So come tax time, they're not cleaning up my books, because they've been cleaning them all year round as they go. And I like it because then I have them as a resource to ask financial questions. So those are my 3 tips. Set up a tax account where you put your tax savings for when you need to pay. Then pay quarterly taxes. Don't wait until the end of the year to make one giant payment, because I'm going to manifest that you're making lots of money. And then number 3, hire an accountant or a bookkeeper, someone who actually does this, because while they might charge a fee, they are going to save you money in the long run, and they're going to save you time and stress. And to me, all 3 of those things make it very worth it to have somebody else who's looking at my books. Well, hopefully that was helpful for you, and you're going to be a little more zen going into tax time next year. I'm Logan Clements. I'm a freelance event producer based in Seattle, Washington, but I execute events here and all over the world. And I do want to thank you for watching my video, and I'll see you in my next one. Bye.